Just a second to get things set up on my side here. I'll take some chart requests. Let me confirm. Oh, change that photo real quick so it's not misleading for people. Just a second. Give people a minute to come in from the Discord as well. Let's see. Just another minute here, and some people are going to be joining in. Waiting for 2 more guys over. Alright, cool. Hi, you can hear me. Let me tweak this slide real quick. And I'll walk through the charts. VDD. Yeah, I'll look at VDD for you. Give me just a second. Let me finish dropping this over here. And ARM. Yeah, I can look at ARM too. Just fix this real quick. Alright. Looks like we've got a few people here and then some watching from the Discord as well. So let me switch over the right window. And I will look at ARM, PDD, a few others. PDD, by the way, Bauer. I've seen quite a few well options related to PDD and the flows, so I meant to take a look at it and try to get ahead of a few of those, but I have not yet. So I don't know that I actually have that one fully flagged and marked in TradingView, so maybe we can use this as an example and go together. Alright, so yeah, like PDD had that huge gap down, which is interesting because there were a lot of whales that actually loaded up on puts ahead of that, and I didn't act on it, of course. So right now, here I'm going to show y'all how I normally go about marking some of these, and there's no perfect way to go about marking your charts, so this is actually a good example to talk through how I tend to go about it. And normally if it's stocks that I'm trading all the time, I've probably adjusted the levels on it quite a few times so that it's super accurate. But that being said, if I'm looking at PDD, you'll notice I'm starting with the weekly chart. So what I want to look for is levels of support and resistance on the weekly chart. You can go with the approach of 2 taps on a level as, you know, an initial test and potential resistance or support. 3 is confirmation. I look at it like that, but then also I try to look at more consistent taps across the level. So you can see we hit there, rejected, hit there, rejected, same thing, hit here, rejected. So that clearly is a level of support and resistance. It served as support here for the bounce, and we got a big breakout when we pushed up over there. So I'm marking that as a solid yellow because it's definitely a key level of support and resistance. You do this quite a few times, you start to get the hang of it, and you will develop your own little approach to how you're marking your levels. But at any rate, I'm going to go ahead and mark a level here just for the sake of it. Just even though I see that it hasn't consistently tapped that exact point, I see that as a key bounce level going on here. You could technically go and mark right in this area here. It'll let me grab it. There we go. You can see I can mark it here as a resistance, and technically that resistance served as support here. It'll probably become more clear once I go to the daily, but I usually like to start on a larger time frame and now work my way down. So even on the daily, I'm usually looking for more significant levels of support and resistance, so levels that have been respected multiple times historically. You can see here that there was some support going on in this current range. Even right there was some support there. I'll just mark this just so we know, because we can see there that it got a little bit of bounce. Something I've shared with people in the Discord before is that when I'm doing any of my support and resistance lines or my trend lines, so take it away, I like to be as conservative as possible, meaning if I am, for instance, looking at an uptrend line, right? So let's draw one. I'm going to use array just so that it's easier, but let's say I'm drawing a trend line. You'll see people that try to get confirmation bias, and they'll take a trend line and they'll draw it and they'll be like, yeah, we broke out, right? I can show you multiple examples of that on Tesla. Same thing here. What I typically am doing is I am going the widest I possibly can with whatever the trend is, because I want further confirmation of a breakout or breakdown of that trend. Also, typically your trends, especially if you look at like a monthly chart or something, and this is why I recommend looking at larger time frames. So if you were to draw this trend line based off of the monthly candles, really need to switch and use my other mouse going forward, but if you draw this with the monthly candles and then you work your way down, you can see a bit more how it varies and shifts. So again, there's not an exact way to go about marking the levels, but just kind of clicking around here showing all that. For some reason this mouse is not playing nice to me today, but either way, this is very clear that even if you draw your trend with the widest possible range right here from those lows, it tested there, but the gap down broke it significantly, right? So that's a very clear trend break. That being said, for the sake of what you are asking for, Bauer, if I'm looking at this, that is like a textbook bear flag as of right now. So see, I'll show y'all. So you've got your pole here, right? You've got this level of resistance is at the top of your flag, and then here at the bottom, we draw. I'm gonna do it on the daily since it's got several touch points to actually draw it out. I'm gonna draw that right there. Usually with bear flags, I draw them red just because it's easier to track and identify. You don't have to use array. I'm just doing that for the sake of it for the video because it's quick, and normally you could do it with a trend line. Just make things a bit easier. But same thing here. You could, here's what I was talking about, right? Somebody could draw this line, be like, oh, it's breaking out, but in reality, it's battling this resistance level here. So if I'm drawing that flag, I'm drawing that flag based off of, man, this mouse is killing me, sorry. I'm drawing the flag based off of that resistance level. That being said, just because it pushes above that resistance level here doesn't mean that that flag is invalidated. Technically, that bear flag is still valid, and potentially bearish pennant, but it's still valid even up in this range. My rule that I like to follow when I'm looking at flags is that the flag itself is no more than 1/3 of the pole, because once you go past a third of the pole, or 33.33 whatever percent, it's not as consistent that it plays out. Is basically the odds go down significantly, right? So for instance, here real quick, and I'll come right back because I want to show this one because it was a really clean and simple example on Tesla. So we had multiple times, like it was a bull flag, right? Up in this region, you had the pole, and it was still in the top 1/3, so that bull flag was still intact. That being said, you don't trade a bull flag when you're in the flag. You wait for the breakout confirmation, and then you ride it from there. Same thing with the bull flag that we saw to kind of illustrate the recent example. I'll come back and I'll circle back on it. I'll pull them for you. But I don't want to get sidetracked too much from PDD since you're asking about that. So as of right now, I don't know if you're looking to trade puts or calls on it, or if you're long on shares. Me personally, that setup's very similar to what we've seen on SMCI. So there's a lot of risk there. Really be more bullish, I guess, on that one. We would push up. Technically, gaps get filled at some point, right? But that's a hell of a gap to get filled. So I would just kind of keep an eye on it. If you see bullish momentum, and especially entering into the gap, maybe trade to the upside for the time being. If you get a breakdown below, then that's potentially a good opportunity to trade puts to the support levels that we marked from the historicals. I'm not saying it's going to get this huge drop like this again, right? That's, while you use the pole for the measurement of a flag, the assumption is not that, oh, I'm going to get the same exact pace at which that previous pole was formed. So you're not expecting that type of drop in a single day or two like we saw that time. However, what you could see is, if this plays out similar to what we've seen on SMCI and some others multiple times, that would be your measured move, which I guess I can measure that for you real quick. And I'm conservative also when I check my measurements for a potential move based off and setup. So technically, a bear flag breakdown, the measured move is going to be about the same size as your pole that it broke down from. Same thing with a bull flag breakout. Your measured move is about the size of the pole of the flag that you break out from to the upside. I don't wait for the exact full length of the pole. I typically will be more conservative with that, and what I look for is a level of support or resistance that is very close to that measured move, because more often than not, that's what we see play out. So 36%, give or take, is what the measured move was from that pole. So let's say that we broke down from this, and I'll use the price target or price range to show this instead, so that you can actually see it a bit more. And I'm going to change it to red. I use green when I'm looking for upside price targets, and I'll use red for downside just because it's easier for me to track. But and you can see that like 36% of a drop would actually be way below these supports, right? So I would just simply, if we see a breakdown here, I would look for 85 as the target, because that's the next key support level. Actually, I'd probably look for a test of this low right here first. Yeah, I'm not going to mark that as a major just yet. Actually, I'm going to leave it as minor. I'd look for a test there. Now, there's not a whole lot of room between that bear flag breakdown and that level. There's only a few bucks. So you get that breakdown, the target I would say would be probably that 85 support. And then I would be looking to see if that can hold. If that can't hold, 71 is your support, and so on. But just a quick and dirty version of looking at PDD. Real quick, I'm going to look at SMCI for Deej, and then I'll go to ARM and SPY and all the others. So Deej is over here in some puts that he could have locked his gains on today, but he is a DGN, so he stayed in. You can see here it's still got a little bit of that head and shoulder, or inverse head and shoulders, I should say, going on, but it's not able to overtake this 474 level so far. Yeah, Bauer, anytime, man. If there's any others you want me to look at too, just let me know. What I'm looking for here, though, is if it can't push and hold above 474 and we see a breakdown of this trend line, it's probably going to go all the way to that 352 support level. We had the Fed interest rate decision today, and they lowered the rates, or they're going to lower the rates by 0.5%, which, depending on how you want to look at it, is a good thing or a bad thing. So some people are looking at it as they're having to drop it that fast because they're behind. Other people are looking at it as a good thing. So ultimately, I don't make trading decisions based on that. I'll look at the levels on the charts and trade accordingly, which we did today on several trades and made great gains. So SMCI, that's the same levels we've been watching. If we see a breakdown, which normally gets crazy on Thursday or Fridays, then especially if it breaks at 436.24 support, that's a great put entry opportunity to the 423 range, which we've seen several times. So I'll be keeping an eye on that to potentially trade that. Like I said, 352 is the only next major support here. You could technically mark this as a support. I'm going to make it a minor though. I would just be watching that range. Real quick, let's look at QQQ. Here, I'm going to look at ARM since you specifically asked for it, height. And keep in mind, ARM is, I can't switch over to the other screen because it's on my other computer, but on my watch list for semiconductors, because that is what ARM is involved with, right? So a lot of the movement you see on NVDA and some of the other things is influencing ARM as well. That's a head and shoulders pretty clearly as of right now. I don't know if it's that obvious to y'all, but here, do this. I've got the indicator in here somewhere, but I'm just, for the sake of time, going to draw the neckline as a key level that I would be watching there. Yeah, I know this is a very volatile stock overall. It gets treated like a meme stock more often than not. So let's see. Key level support and resistance, right? So let me break out this. We're going to do the same thing. I'm going to start on the weekly and look at our key levels of support and resistance that have been tested and held or rejected at. So there's definitely some support in that range there. So I'm going to mark that. You can see that we held the support and then we broke it down and it was a big breakdown. Same thing. And again, this is on the weekly, so we can adjust these accordingly once we look at the daily. I'll just switch over the daily since there's such a smaller time frame here where we're in this zone. You can see that this was you can see this was definitely a range where we do not like this mouse, guys. You can see this is a range where we had some resistance going on, and that's typically, so this ties in with supply and demand zone trading and price action trading. I trade the same style. I know that some other people do as well. Really, what you're also looking at with the supply and demand zones is the time frame in which you're referencing them, because you'll have them on smaller time frames, larger time frames. I trade multiple time horizons, so you see me trade both and monitor both. But if it's something I'm marking with a solid yellow line, it's from the larger time frames, like we've seen rejections there multiple times on the daily candles. I'm gonna mark a minor support right here in this range for you. And you'll see here in a second when we look at the smaller time frame why. But if I jump over to like the 4 hour, and this is a head and shoulder setup one way or another, and it's easier to mark it and draw it here. And again, head and shoulders aren't often perfect. This one's actually relatively clean, but let me draw it so that you can see it. I could have marked there, but that's an extreme, so I'm not going to. Again, it's like any other charting, it's kind of, everyone has a little bit different approach. I tend to be very conservative, and if you're wondering why did he draw it like this instead of drawing it like to where it exactly follows within the candles, because charts aren't perfect, right? So pattern itself is there, it is intact. All that is necessary to define a head and shoulders is a breakout, a lower high, a dip lower, a higher high, a dip lower, typically around the same range as the neckline for the previous one, but that doesn't mean exact, followed by a lower high than the head. So this head and shoulders setup would be invalidated if the right shoulder peaks above the head. So that means above that level. I'm going to go ahead and mark. I was going to mark. I'm going to go ahead and mark a resistance level up there. I'm going to do it as major because it rejected hard off that level. But right, this is intact. So measured move for that head and shoulders breakdown is normally the height of your head to the neckline. And some people might try to go over here and be like, oh, it's 52%. Again, I'm conservative with anything that I'm measuring. So you can measure 47. I might even pull it up in here and look for 42. But technically 47-ish is about what the range is. So ARM doesn't have a whole lot of historicals just because it's relatively new to be trading. But you can mark some of these levels of support and resistance that you can see that it kind of held and respected over time. Right, and the measured move of that breakdown, similar to what we did a minute ago, is about 47%, which, look at that, just happens to be exactly where that $50 support is. So this is why it's always interesting to me whenever the measured move of a pattern like that happens to exactly align with a support level. Now, there's no guarantee that that plays out, but I will tell you that there is a bearish head and shoulder setup on several semiconductor stocks right now. Like, same thing you kind of got going on here with ARM. If you look at SMH, which is the ETF for the semiconductors, you can see that the head and shoulders there are still intact. It looks like we actually are going to reject and move lower. I'm looking to see if we get the gap fill at 212.40 there. And then same thing over here is if that neckline breaks, measured move around 28%, give or take, right? So 28% would be down in this area, which again, this is why I don't just mark the percentage. So I would be looking for a support level that's within that range. So if I saw a neckline breakdown of the head and shoulders there, what I would actually be looking for is that 161 support level to be tagged as the measured move. Now you could also mark these points right here that were support, and you can do what I do is I trim at each of those levels of support if I'm trading puts. Alternatively, if I'm trading calls, I'm trimming at each of the resistance levels overhead. But definitely keeping a close eye on this setup with SMH, because ultimately a lot of the movement we've seen to the upside with the markets the last 18 months has been coming from semiconductors and specifically NVDA. So if I jump back over to NVDA real quick, since we haven't looked at it yet, you can see it's still in the same downtrend that we were in. Yesterday we had a bearish engulfing candle technically, which was interesting how today played out with the selling pressure. I tried to tell people on the NVIDIA group, which I get the bullish bias. I'm long NVIDIA shares, I'm long Tesla shares. That being said, you got to hedge. No, that's good, Hyde. I'm glad. I've been wanting to do more videos like this, kind of to talk through, because I think it's kind of hard for people to wrap their head around the key levels of support and resistance and how I trade whenever they're just looking at the chart. So doing this like this and actually talking through it's helpful for me to figure out how I can better explain things within the charts as well. But also, I'm glad you are finding value out of it, because ultimately, I don't want the ethical trading Discord to be like buy here, sell there, and you're purely doing it based off what I say, because that's not cool. I'd rather you learn how to go about doing some of these things yourself so that you can actually be equipped to do so, or you can just lean on the charts that I post in the specific ticker channels and you kind of know how to interpret and make your decisions on where you want to trade. But at any rate, watching NVDA here because it had a bit of a bull flag setup going on, and technically it still does. Remember what I said earlier about the 1/3 rule? Whenever you're talking 1/3 rule, for those of you that are into lawn care and stuff, that's immediately what my brain thought of because that's a rule for cutting your grass. But anyways, you can see that this was holding that 114.78 support, and I mentioned that on yesterday's video. I know the mic wasn't on, so you can kind of see me calling it out, but that was the support level I wanted to see held if we were going to get a bull flag breakout. We still could, but the odds of this playing out are dwindling a bit since we broke that key support, and you've got minor support here that we tried to hold, and then there's a minor support down at the 109 level, but really there's not another significant support level until that 108 level. So again, waiting for confirmations, looking to see what happens tomorrow there. I really hope that some people took the advice to hedge their long positions with NVIDIA. We've had so many chances to do so, like especially when we were in that 120 range last week. That was a great chance to sell covered calls or at least buy a put or two to hedge against your long-term holdings of calls or shares. But at any rate, people are going to do what people are going to do. So I'm watching this right now. I'm looking for a breakdown that makes sense. We're forming a bit of a downtrend here. You can see we did have that inverse head and shoulders breakout that moved up in there, which it's not here anymore, but that was actually, I had a green price target drawn there, and that was the exact level that we rejected at, was in that range. So I'm trading both ways typically when I'm trading stuff. I'm watching again for a retest of this 96 level. I know that people think that's not going to happen, and hopefully it doesn't, but I'm not putting it out of the question. I've learned to hedge accordingly. Overall, with even things being kind of bullish or hopefully bullish today and yesterday with the Fed rate inbound, NVIDIA still has some rough days, right? So it's really hard for QQQ and SPY to keep pushing up and drive hard whenever NVIDIA is one of the top weighted components of that. So I'm going to jump over to Apple really quick before I jump into QQQ and SPY. What I was talking through with the guys earlier today was this gap fill, which we hit. So I'm going to go ahead and mark that to solid purple because that gap got filled, and you see that we rejected at that, even with the volatility with the Fed interest rate decision. So I look at active trading hours. So even though that pushed higher in after hours, it looks like, really active trading hours is where I'm looking for my patterns, because you have such wide ranges of movement with the low volume within pre-market and after hours that it can be inconsistent. So typically for my patterns, I'm looking more for active trading hours. I drew this downtrend line based off the daily, and you can see we filled the gap and rejected. I know we've talked about gap fills quite a few times the last few weeks, but I guess learning opportunity again here. The gap was made whenever we closed here Friday, and then we gapped down and opened way down here Monday whenever the news came out for the iPhone pre-orders being lower than expected. So we scalped some puts today for Apple when it rejected off that trend line initially, so those actually worked really well. I think we took like 43% gains off those. So in and out, there was no reason to stick in those. I'm also in, or was in, I think I locked gains on most of them, but some other Apple puts for next week that we entered earlier as well and made some nice gains on. So those are going good. What I would want to see here for more upside movement on Apple would be a breakout above that, and ideally, and again, this was mentioned on the video yesterday that you could see me pointing, but you can't hear me because the mic was muted. But ideally for this, I would want to see a breakout on the daily to confirm above that downtrend line, which we don't have, followed by a breakout above this 223.49 level. And I get it, some people like to trade bullish momentum, stuff like that, before you actually have confirmation. That's fine if you want to do that, and trade it and hope it plays out, that's cool. I usually wait for confirmation these days just because there's still plenty of gains to be had between a confirmation and a price target without taking the risk of getting into the trade way too early. So I used to trade the other way years ago. I've kind of learned or shifted away from that, and I've had a lot more success since doing so. What I would look for here, though, is a breakout in the daily above that 223.49 level, and then potentially scalp calls to that 226 level. For me, this is kind of a similar situation of what we have going on with Tesla, where there's a lot of risks there because you're moving between zones that are really close together for supply and demand. So upside risk, you might hit that supply zone and not move any higher. And if you're in any calls that are shorter dated, you can lock them really quick and you might be okay. But if you don't, it might be painful and you might get theta decay and burn and actually not make your gains on those. So a lot of the trade setups right here on Apple, I'll be watching it for further breakdown if it rejects there again. Because the bear flag breakdown here, this was the bear flag, this was the pole. The measured move for that was in this 209 range, which you can see there's no support or resistance right there at that exact level. There's actually a minor one over here, but I would be looking, if we reject there, it's probably going to minimally test this 216 level again. So I might be watching that to enter more puts if it does. I'll be looking for a break to the upside as well and see how that goes. But Apple, kind of the same level and range going on. Jump over to QQQ. QQQ. So we were talking about this over the weekend. So there's several things going on here. I'm going to start with the daily. Because really right now, like, I know people are bullish because SPY is at all-time highs, but like, you've got the top contributors in both that are tech weighted, right? But look at the QQQ chart, and I'll come right back to it, but look at the SPY chart, okay? So just because SPY hit all-time highs, which it rejected, and we'll come back to that and talk about it, doesn't mean that everything else does too. Because if you look across most tickers for today, there's quite a few that were significantly red, and they didn't hit new all-time highs. So if you are trading SPY and QQQ the same way, you're going to get burned at some point or another, especially if you're trading shorter dated options. So that's why I always recommend to trade based off the specific ticker you're looking at and make your decisions based on that. Anyways, what I'm looking at on QQQ here, so you've got this larger time frame uptrend here that we haven't tested really. We tried to right there, but we got really close and then we bounced. You've also got this shorter time frame uptrend, which isn't really all that shorter because it's technically almost a year now, but this was the uptrend, right, that we developed and we were building in, and we broke down from it back in August with the Japan carry trade situation. We were able to retake that, but then we rejected back out of it again, and then you can see here that we tested that trend line again, and it's attempting a rejection. So if we were to reject at that trend line again, I mean, you can see there's some support levels within here, and previous gap fill levels often can serve as support levels or resistance levels. But this, I want to see how this plays out the next few days because I look for confirmation on this setup just like I do for a breakout. If this does reject, there is a head and shoulders pattern here. The head and shoulders measured move is 383-ish. I'd be looking probably to lock gains initially on whatever swing puts if I do enter them there around that 412 support level because that's a key support and there's a demand zone there. But I'll be watching this to see if we form a lower high here for this current downtrend, which I know there's a lot of lines, so I'm going to try to call them out and point them out real quick. But you got this downtrend, right, that we rejected at here yesterday and today. You've got this uptrend, the larger time frame when I just talked about that we're risking rejection at yet again. So I like to mark multiple levels in multiple time frames this way because that helps you identify things like confluence. So confluence is what we have here, where you have multiple setups that are coming together and you're seeing a rejection or a pattern take place at that level of confluence. So confluence here with the downtrend on the shorter time frame, confluence here with the uptrend on the larger time frame. If I jump over to the 1 hour, you still have a bit of bull flag going on here. So again, I want to see how things play out. This is the pole, that's the flag. A bit of an inverse head and shoulders going on here as well. But what I normally am always keeping an eye on before making any kind of swing trade decisions is how the larger setup is, because ultimately what you normally will have is that the larger setup, which is still an uptrend if we're being clear, with the exception of this potential breakdown, is going to take ultimately the priority, or usually takes the driving seat on how things play out. So watching this closely, I'm not saying load the boat on puts or calls here. I'm saying probably don't load the boat on calls, obviously, because you're fighting several resistance levels and there's several bearish setups here. If you're long, then you would want to hedge. If you're short, you want to hedge accordingly, probably too, or just sit out. I'll be watching those levels though to see how we play out the next couple of days. SPY tagged all-time highs, right? And what I was showing in the video yesterday that y'all probably couldn't see is, here, I'm gonna switch over to the daily so we can actually talk about it. The previous all-time high here, and we rejected back below those. I was optimistic, or I was hoping that we could hold over that resistance level, or which now became support, that we were holding above yesterday. So right there at the 562.98 level. And that's why I was looking for confirmation of holding above that for further breakout and upside. We are still trying to hold this bull flag here. That being said, there's a lot of risk going on there, because if we break this support, you can see we very quickly can head to the 556 level and very quickly can move lower than that. So we'll be watching that closely in the coming days, see how that shakes out. You're also fighting in a supply zone here, which is where there's a lot of sellers. That's something to keep an eye on. That big tail is not great, because normally it's signifying that you've got uncertainty within the market, which makes sense based off the Fed interest rate decision and labor conditions that people are still skeptical of. So we'll kind of see how things play out in the coming days. I've got to wrap this up here in just a minute, but I'm going to jump over to Tesla real quick, because this is everybody's favorite, and y'all know I'm always trading Tesla. So I talked through this in great detail yesterday, but I'll try to remember what I stated, since that didn't come through with the mic muted. So what you've got going on here with Tesla is same thing we typically see, and I watch the whale flows for it consistently, because I'm also selling covered calls against my long-term shareholdings. I like to sell covered calls in this range because it's a significant supply range. Same thing here. So what I've been watching for over here is that the whales basically have been, every time that we bounce up in that range, they sell covered calls, spike premiums to people that are short dated, especially retail, within this range, and then some of them are buying to close once we hit the pullbacks. Others are basically just letting it trade flat and burn up the premiums, which end up expiring worthless on most retail traders, because most get greedy and don't lock profits quick. So one thing that I mentioned on this too during the call yesterday, and I want to mention it again today, is the row of leap options, so calls and puts. So the row basically is the Greek that's influenced by the interest rate. So the interest rate decision today actually means that there's going to be a negative impact, and a more significant one, since they went half point rather than quarter basis point. The row basically is going to drop the premiums on leap options. It impacts shorter dated options as well. It's more significant on the further out options though. So that's something to keep in mind if you're in leap calls or something on things like Tesla, as well as other options. You can start to see a little bit of it if you go look at the January contracts for Tesla. Even though it traded relatively flat and had a green day, I think, as of close, it end up closing green? No, it didn't end up closing red, because it rejected hard into close. That's right. You can see even earlier today, if you look at the premiums when Tesla was green, once clarity came out around the interest rate decisions, the premium started to drop a little bit, which the interest rates haven't fully been cut yet, but you're already starting to see the reaction to that and the impact. So just something to keep in mind. That's technically a bearish engulfing candle for the daily. I sold more covered calls up in that range yesterday. Right now, what I mentioned on the call yesterday was that I've been selling 230 strike October 18th expiring options on Tesla for calls, and then buying to close them basically on the pullbacks. So that worked out fantastically several times. Right here was one of the best ones I've had so far, where I sold the covered calls right there for around 2,200 was the price that I sold 3 or 4 of them at, and they bombed the next day. So I bought to close, I think 4 of the 6 that I had sold that day. Sold more covered calls right here. I've done it 3 or 4 times when we were in this zone, so it works well. When we were heading into earnings, I did the same thing. I know a couple of guys on Discord did as well and hedged their long positions, which worked out great. But what I'm watching right now on Tesla is this uptrend to be broke. So this is a bear flag that we have, actually more of a bearish pennant. We got in that zone. If you zoom way out over here, you'll see part of why I sell the covered calls the way I do, because I know that people were asking about that in the Discord, so I'll elaborate a little bit more again today. So normally, why do I choose like the 1018 right now instead of selling the 920s? The 920s obviously would have more theta decay. That being said, if you look at Tesla, when it gets in these supply zones and these key levels of resistance, it typically stays within those for a short period of time. For the max, you can see probably about 2 or 3 weeks. So when I go 1018s, for 45 days out on options, that's when the theta starts ramping up on those. So it's beneficial for you as a seller. Also, like I mentioned, it tends to stay within those ranges for a brief period of time before breaking down. It can break out, but normally you would need a more positive catalyst to push it out. Plus, I normally am keeping an eye on the well flows to see, are the larger funds that have been selling their covered calls, are they exiting their positions at the top of the range? And if I see them exit the positions, then I'm like, okay, somebody's actually expecting this to push out to the upside and they know something. So I might buy to close my call positions at that point. That being said, I'm not seeing that right now. I've seen more covered calls being sold by the larger funds, which tells me that they're not expecting the breakout to the upside on Tesla here. Tesla has the Cybertruck, or I'm sorry, not the Cybertruck, wow, Robotaxi event on October 10th. So expecting and looking for them to continue to wrap retail traders into those options heading into that event. They'll either trade them flat, they'll let it drop, or they'll buy to close accordingly. But one thing to note here on Tesla is while it hasn't broken this red down uptrend line, it did break down from this smaller time frame uptrend it's been in for the past 2 weeks. So you got to break down, you got to retest another rejection. So I definitely would keep an eye on that. The technical setups on Tesla are actually super consistent if you're used to trading Tesla and if you can drop your bias, which is hard because I learned that lesson the hard way back in 2022 when I basically kept on chasing calls because I thought Tesla could only go up, right? And it hurt bad all through that time period. So I dropped the bias. I now trade it both ways. I'm long shares. I'll trade put short term. I'll trade call short term too where it makes sense, but in this range, it just hasn't made a lot of sense for me because you've got so much overhead resistance in the zone, and the premiums typically are so IV spiked that you're looking at like $500 for a single contract that's a week or 2 out, and max, some people are gaining like 40% gains before tagging a resistance level. For me, I'd rather put $500 in some other options that have a bit less risk of not turning against me in that trade. Alternatively, puts are very easy to trade on Tesla within the zone. So we made really nice gains on puts a few times the last couple of weeks. I'll be watching for a key rejection and breakdown to do the same, especially if we break down from this trend line and confirm. Because we're going to, if we break that trend line, we're going to test 212 quickly, and then we're going to test 208, which is the next key level. If 208 can't hold, then we go sub 200, basically is the way Tesla rolls. So there is a gap still down in that, I think, 167 range, or 162 range that has not been filled. So I'm not calling that as out of the question at this point. I'm just being very careful and watching closely. one thing I've mentioned before on the videos, and I'll call it out again, is that if you look at the monthly chart for Tesla, people get super bullish without looking at the underlying whale data of what's going on. But almost every time you see these breakouts on the weekly and monthly time frame, people scream Tesla 300, and then they all YOLO into calls, which are those same calls that we were talking about earlier that the whales are selling to people. More often than not, you'll see here on the monthly candles a rejection back under that trend line. So I will not long calls for like swinging for a month or two out on Tesla until we see a confirmation and a breakout on the weekly and monthly time frame above that downtrend line, because of the example right here. People long calls right there thinking, oh, we broke out and we've confirmed we're good to go, and we didn't on the monthly, and we rejected hard right back under that, right? So while people say, yeah, but I can average down and I'll be fine if I just stay in the calls long enough, can and can't, because if you go look at some of the Tesla options, and I'll try to do one of these videos next where I actually have the Webull for the options on the screen too, so I can walk you through it. You'll see that the premiums for those options that are a month or two out, such as those 1018, 130, or I'm sorry, 230 calls that I'm selling, basically even with the same pop outs that you're getting for these pumps, the premium's not increasing like it did because theta has been slamming on it, the delta's not as beneficial as it was, and time is against you. So even if you go to the January calls, you're now fighting the situation like I mentioned with Roe, where your premiums are getting hit for different reasons. So be careful. I'm not saying Tesla can't do a breakout. My inner bull really would love that, especially with how many shares I'm sitting on now. But I'm also trading carefully, and I'm going to continue hedging my position accordingly in the meantime. So we'll be watching that on Tesla. I've got to wrap up the call now because I gotta head out. But if there's any other tickers y'all want me to go through on some videos tomorrow, let me know and I'll try to block some time and I'll do that. But hopefully this was helpful. I know we talked through more than expected and ended up being a much longer video than expected, but hopefully it kind of explained the logic and thought process on, for one, levels of support and resistance, and it'll be helpful for people within the Discord, and just honestly, even if you're not in the Discord, I hope it's helpful to you. I just want to go ahead and clarify, I'm not a bear by any means. I'm a bull at heart, even though I don't want to say I'm a bull or a bear, because ultimately I'm a trader. So I'm going to trade whichever direction I need to make gains, and I'm going to look for data-driven decision making with any of my trades is how I trade. So hope everyone has a good night, and look forward to seeing y'all tomorrow.